What's up YouTube? In this video I just wanted to go over something that I learned a few years ago about trading Forex. So I'll probably start this whole thing with how I introduced myself to the Forex industry. So after university I joined a firm called Phoenix Group, and in Phoenix Group I was there as an actuarial scientist, as an intern, where basically my job was to as one of the guys there, I had all the shit and I was just doing as I was told, updating spreadsheets, a lot of market value updates. Essentially, my job was minimizing risk for the fund. Now, Phoenix Group, they had around $60 billion assets under management when I was there. I think now they've got around 250 billion. And my job had nothing to do with trading the markets. But there were people within that building. So the place I was working was huge. It could cater for over 3,000, 4,000 employees. You had asset management teams, actuarial teams, marketing teams. It's like everything all in one. And referring to the title of this video, why did I stop using price action analysis? So the actual reason why I stopped using it wasn't because I was sort of told or I'm heavily against it. I actually started off with price action. I was looking at candlestick analysis, moving averages, RSI, stochastic oscillator, pretty much everything you could think of, volume price analysis. I read books from various people whilst I was studying before university, during and after, on a lot of different technical techniques. And what I found was not to what I was expecting. I was trading the market using those techniques on a manual backtest, which is what they teach you to do in all these books, where you just look at a price chart and you try to get a handle on what's going on, flicking through it, manually backtesting, which I do not recommend, and it's something that I haven't done for absolutely years because it's inefficient and you get anchored results that basically suit your agenda. So if you're looking at a candlestick formation and you want it to predict the price going up, no matter how clever or smart you think you are, you'll anchor your back testing, if you're doing it manually, to scenarios that work, and you'll basically say, oh, this worked really well during this time, so all I've got to do is wait in the future for it to work again. Unfortunately, it doesn't work like that. You need proper statistics. Actually, this is a good term to say, one of our financial engineers pulled up statistics on, if you guys are aware of something called hammerheads and shooting stars, and how effective they actually are at predicting future price movements, and it has a negative edge across multiple time frames. So we tested it on, I think, 1 5-minute, 15-minute, 1 hour, 4 hour, and daily charts, just to basically prove, not to everyone else, just to ourselves, whether these were functional tools to use as a forecasting measure, and they're not. And that wasn't the only thing. This all stemmed from a conversation that I actually had. So back to my story, where I was at Phoenix Group, there was a guy called Stacy who was looking over me, and he had been around all the division. He was originally part of asset management. Now he was a managing actuarial scientist. And I sat down with him and I was like, look, Stacy, I've been trading on the side. It hasn't worked out as I've actually planned. I'm not sure what I'm doing wrong. So he sat down with me and he was like, this was over lunch, they had a massive canteen. It's quite good food, to be fair. And he was basically asking me some questions on how was I generating my ideas, how did I know which currency pair, because I was trading primarily Forex only then, because that seemed to be one of the most, as it's portrayed, as the largest market. But that doesn't mean anything in the grand scheme of things. When you're trading, what you're really looking for is something that moves a lot. Doesn't matter how big the market is. Liquidity does matter in the sense of it getting in, get out, but as long as there's enough there where you can close orders, it's fine. And I walked him through everything that I was doing, everything that I've learned. And he essentially told me that what I learned was not going to make me any money in the markets. He threw this analogy at me, which I thought was quite eye-opening at the time, and I felt like this is a good time to share it, because there's probably a lot of you out there who are still using purely price action or technical analysis to trade the markets, and don't, if you're making money from it, That's fine. This is just my experience with it. I just want to give you an outlook. So the way this analogy worked, he basically said, if I was to sell you a car for £100,000, but you didn't know which car it was, would you buy it? Sat there for a second and I was like, it's a bit of a stupid question. Obviously not, right? I wouldn't buy this car. And then he goes, well, what if I discounted the car to £70,000? Would you buy it then? And I was like, no, I still don't know what car it is. So it's a bit of too high risk. It doesn't make sense. I would not do that. And £70,000 back then to me was a lot of money. So okay, he goes, what about if I discounted that to £30,000? Would you buy it then? And I was like, the answer is still no. Why are you asking me? You still haven't told me what car it is, so I'm not going to buy it. So essentially he was saying to me that, look, I'm discounting the price by 70%. The price has dropped. Why aren't you buying the car now? I was like, well, obviously I don't know what the car is. And then he goes, well, if I tell the car it's a Ferrari F40. So for those of you that don't know what that is, it's a classic Ferrari. It's worth over $1 million. Hopefully I'll own one soon. Essentially, in this example, once I knew what the car was, I was like, well, of course, if it was a Ferrari F40 for this hypothetical example that I have no idea what you're telling me about it, yeah, I would buy it for 30,000. And he goes, why? And I was like, well, because the car that I'm buying is worth a lot more, so I could either sell it or I have an asset, right? I have an asset that I can keep. And it basically opened my eye to something quite sort of substantial that impacted and rippled across to why I don't use price action primarily anymore now. And basically what he was saying is, when you're looking at the price alone without actually knowing what you're buying, it's an absolutely crazy thing to do. When he showed me the car, and I was like, yeah, that is true. So he goes, why is that different when you're trading the markets? Why do you think that you can look at price alone and the changes in price to actually purchase something? How do you know what you're buying? So if you were to open up your charts and you're going to look at, let's say, pound USD, how do you know what you're buying? All you can see there is the price. And the way he portrayed it to me is that it's half the story or even less. He goes, if you're just looking at the price, but you don't know exactly what it is and what is the value per se, whatever you want to call it, or what's fundamentally, what is the asset, the product, what is it about, the price actually doesn't mean anything. And that didn't really strike home until I started to understand the method that he was about to tell me, and it's called global macro. So for anybody here listening to this, that is the method that I use. I use the global macro approach to trading currencies and stocks, but I use a little bit of value investing with my stocks when I'm picking small cap stocks. So this is why. This is the answer on why I actually stopped using price action, because in a sense, it didn't make sense to look at the price if I didn't know the value. Now, I didn't completely stop using it. I essentially used it a minority of time because it didn't matter as much once I already knew how to calculate value, if that makes sense. It's very simple. If you're looking at the currency pair GBP USD or AED USD, what you need to work out, is what he was telling me, is whether the value of the asset is, in comparison to the price, good value for money or bad value for money. And then from that, you can make an educated decision on whether you want to trade it. Because if you just look at price, you can't make that decision. And if you just look at value, you can make that decision, but you still need to know and have a quick glance at the chart at what the price currently is. And that's where I am at right now. This is where I've been for the past 4 to 5 years, where I've basically been looking at 80-90% of the time at how on earth can I work out the value for every single asset class that I wish to trade. And then minority of the time, probably less than 5-10% of the time, I'm actually looking at a price chart and working out whether the price is at a level where it is a good time, it is good value, whatever you want to call it. You know, I'm not a value currency trader, but essentially it is kind of looking at that. It's trying to look at fundamentally what am I buying and then comparing the price afterwards. And that doesn't take too long. It's, you know, looking at a price chart to see if it's whether or not, if it's above or below what I expect it should be, is quite a simple task, and to be honest, and that's really why I am where I am now. And I feel like I had the pleasure of being able to have someone at hand. I'd call him what you could call a temporary mentor. I actually left Phoenix Group and started Logikfx around 4 years ago now, I think 4 or 5 years ago. And I've just been trading ever since, using that method and strategy, and I've automated as much as I can of the value side. And now you're probably wondering, Marcus, how do you calculate value then? What is the value side? Especially when you're dealing with currencies. With a stock, it's quite easy, you're just looking at the company and you're analysing the company. With a currency, it's not as straightforward. So a lot of people misunderstand what it means to calculate the fundamental value. And the trick is to look at the country. You need to be looking at each country within the currency pair and deciding whether one currency on a fundamental basis, i.e. their imports and exports, or economy rather, before we get into currency. So the economy, whether they are growing or shrinking. And there's loads of different factors you can look at. Majority are noise, but the main things would be, you want to be looking at employment, unemployment, interest rates, the balance of trade, imports and exports, whether the companies or the stock market returns are growing or shrinking. And then once you've done that, you can be looking at a comparison between two economies and look at differentials. So the growth, the difference of growth in terms of gross domestic product, the difference in interest rates, so you can see where people will earn more money from. So then you put yourself in the shoes of, let's say, $1 billion fund like Phoenix, and you work out where they want to hold their currency because it will pay them higher interest. And then once you've worked all of that out, you can basically get a good idea then of what you should be buying and selling. And then once you've got that, you can flick over to the price chart and see if on a price action or technical basis if it is a good time to do that. And that's the way I trade now. It's a very simple process. I have 3 phases. The first phase is the majority of what I do, 80 to 90%, where I'm just analysing that fundamental data on economies, on companies. Second step is quickly glance over the chart and see if on a technical basis that the price has been moving in a way where it's a good time to buy. So I'm not going to go through exactly what technical aspects I may look like, because really they're not too major. As long as the price in comparison to before is lower, it's a good time to buy, and if it's higher in comparison to before, it's a good time to sell. Any other fancy tricks like accumulation distribution zones, buy and sell zones, candlesticks, they're not going to give you any more of an edge if you're using those. Generally, you'll always find one thing that will say buy and sell. So I don't go too deep into the technical stuff anymore. And then the third thing is, how do you manage it? Of all of you guys listening to this probably already know how important risk management is. If you don't, really important. You got to be using methods to cap your downside and open up your upside. So that's my insight. That's where I am. That's where I was before, and why I've actually basically changed into a trader who follows those processes. Now, this doesn't mean for you that would be the correct thing. You will have to obviously make your own educated decision. This is what's happened to me and my journey, and I found absolutely no success using technical analysis, price action, or any other indicator over the long run. Over the short term, over 1 or 2 months, I would develop strategies. I even named one called the wedge strategy that had an 88% success rate, right? That's how I thought. Over those 2 months, it worked really well. Then all of a sudden, it just completely broke down and it didn't work. And you know what the problem is with a strategy like that? You'll never, ever understand why, because you're just using price alone. And unless you're actually looking at the thing you're buying or the thing that you're selling, you'll never know why your strategy does or doesn't work. So on that note, thanks for listening. Drop me a subscribe, follow, hit that little icon so you get notifications. We have an Instagram as well, which is @Logikfx. My personal Instagram is @MarcusRiot. So if you want to follow me, see what I'm doing throughout my life. There's not too much trading stuff on there, but you'll get to know me a bit better. And if you want to see more videos like this, comment below, and comment below the strategies that you currently use. Do you use technical analysis? Comment below how you're using it and how it's worked for you, and we can get into some nice intellectual discourse and see on why it was working for you and why it wasn't working for me. So yeah, thanks for listening. I hope to see you guys soon. And also, if you're interested in learning my approach to the markets and why thousands of other traders are using the same approach as me at Logikfx, there should be a link in the bio that goes to logikfx.com, and we have something called the Lita program where you can learn all of that and actually use the technology that I use to actually analyze the value of currencies. Cheers guys, and I hope to see you soon.